PAC Asset Management, your asset manager of choice.
Has been peculiar in different areas. I mean, this year there has been a lot of social separation. If I ask you, I know quite a number of us have friends who have relocated. Yes or yes. If I can see the comments, I totally like it. So a lot of people have, relocated. I mean, this year, the jackpot concept became a very popular one. And then they call one Shakpa as well, and then it's just been a generally interesting year. I mean, a few days ago, I was chatting with my husband, and we looked around us and counted about maybe 30 to 40 people that we know who have relocated. Right. It's just been a very, very peculiar year.
It has really been,
right. Across different asset classes as well. You see the stock market, they keep saying 1.4 billion has been wiped out. And I keep asking, where is this money that has been wiped out? Where is it going? Where has it been wiped out to? Right? And then back home here in Nigeria, for those who are in Nigeria here, you just wake up and see the most interesting news. I mean, I think, for lack of a better word, they're either changing the naira or things are happening, and Twitter is not a good place to be if you are trying to protect your mental health in a time like this. I'm not saying go off social media, go off Twitter, but hey, things are just happening, and you've got to stand your guard and just protect yourself, protect your mental health, be very intentional about your circles, know where your money is going, follow the money. I'm going to share my slides, but I'm just trying to lay this foundation because it is important. I know you have attended many webinars this year, right? You have heard about money and you're like, where's the money? What webinar are we doing again? But hey, more than ever before, this is a time for you to learn about finances. I can tell you this for free. There is going to be a boom. If you look at prior years and patterns, there's a recession, then things take off again. I am almost certain that most of us here are old enough, or were old enough to have realized what happened in 2008. I wish I could see the comments. Linus, are you seeing the comments? I want to ask a few questions, and I want the attendees to really answer. How many of you were old enough in 2008, to understand or to have understood what happened around the world in terms of, the economy? How many of you had shares that sort of tanked? How many of you had investments that weren't doing well? How many people? Let me know in the comments. I can't see the comments, but hey, maybe the moderator can just help me equal people are saying. I can't see any chat.
So it will be affected right now, so that we can. So you can please just leave a chat on the comments section.
Right. And so this is not the first time that things have happened this way. So I like this topic that talks about financial finesse. Like, this is a good time to get your finances together. Now, maybe not your finances, but your ability to be able to manage your finances. Now, this is not the time where you throw caution to the wind and say, where is the money? I don't know what is happening around the world. What about that? Do you get? This is a time where you gain all the knowledge for the boom ahead. How many of you are ready? How many of you are, optimistic that there's a season of boom ahead, and only those who are prepared for it will be able to sort of, embrace and just enjoy the boom. So I will be talking about a few things that you need to know. I'll be sharing a few things that can help you, and we will take this conversation away from there. Chat room is still disabled. Can you drop a chat, please, so that we can know if you are part of it? I see that the chat room is disabled. Admin, can you enable the chat room, please, so that we can have a great conversation today. All right, audience, try and drop a chat and let's see if it's been enabled. So I am going to go on with my conversation already, pending when the chat room is enabled. Okay, so let me share my screen. I will be talking about a few things that'll be of interest to you. Hope you all can see my screen. I will run through it quickly and then we go into the Q&A session, which is going to be more interactive. Anyway, okay, so let's go ahead. What are we talking about today? We're talking about investment objectives that you should have. You know, remember, so I see the charts. Thank you. Well done. Yes, Nolly, Timmy, everybody dropped. You know, I asked a few questions earlier on. You hit me back with your responses. Do you believe, are you optimistic that there are better days ahead? Were you old enough in 2008 to have understood what happened back then? And I also said, drop the link for this event with a friend, somebody that you know will benefit from this. I see a few people that I know, and please drop. I want us to double or triple this attendance in like 5 minutes. So if there's somebody that is there for you, I'll be sharing a few things, you know, that will be of interest to you. I want you to send this link, the link to this session with at least 2 of your friends, and like literally pull them by the hair and say, come into this meeting right away. Thank you. Remilekun says, better days are ahead. I love it. So he says, I'm hailing you with all my hands, with all my chest, you know. Izuma says, I didn't really understand what was going on in 2000. You were in medical school, right? Yes. Well, you knew about it. You heard about it. You might not have understood it. But, you know, you were in medical school already, right? But, hey, the things we'll be sharing now will just help you re-strategize your financial. Yeah, 2022 has been funny. Things have been happening. But in 2023, how can you re-strategize? I can tell you this for free. A few people that are close to me have mentioned that they have made the most money this year. I mean, I look at myself too, at the risk of bragging. I'm like, hey, what has happened? You know, this year as well, I can't say I've done badly with my finances. It's about knowing the necessary tools. Yeah, Adenike Adebayo, better days. Knowing the necessary tools, knowing where to plug your money, knowing the things to do, and doing those things. Okay, so during the course of my presentation, I will talk about investment objectives. I'll talk, you know, just a bit about real versus nominal rate of return. How should you begin to apportion your money going forward? And what are some of the investments you can do? I want to appeal to you. Please don't block your mind. You know, this happens a lot of time. When people get into a webinar, you know, in which people are talking about finances, they block their minds. You know, we're not talking about big money. If you have big money, fine. But if you have small money, it's this financial journey is not a marathon. It's not a sprint, it's a marathon. I have been at a place in my life where, you know, I was investing 5,000 naira consistently. And when the time came, I could invest 7 digits, I could invest 5 digits, I could invest 6 digits. Right. And then I could invest 7 digits. So don't block your mind. Don't think like, no, I don't know what they're saying. I don't have plenty of money. You are here and we'll go through it together. Ige says, I was mainly lucky to escape the market crash. I sold my entire stocks. Wow, Ige. Please cut us some soap. How do they say it? Cut us some soap so that, you know.
Cut soap for me.
Cut soap for me. So that we are aware and we're discerning. And we know, you know, when to opt out. But really, when we talk about investment, not all investments are volatile. You don't have to lose money all the time when you invest. And that's one of the things I want to share, you know, with us in this conversation today. All right, let's move on.
All right.
1 minute. Okay. Now, we're talking about investments. One thing I see with a lot of people, when they hear investments, their knowledge is largely around what they see people doing, what they see their friends doing. So their friend will tell them, there's an investment that will give you 30% in 9 months, in 10 months, in 12 months. We're all guilty and we jump into it. As investment club owners, we want our members to do well. So we look around and we say, okay, these are opportunities that people should embrace. And then we throw it at people. One thing I have seen is that a lot of people do not have investment objectives. You just jump into investment. You do not even understand it. We will touch on that. Now, there are quite a number of investment objectives that you can have, but these are two major classifications. Primary objectives versus secondary objectives. Under primary objective, some of you may just want safety of your principal. I don't want to ever lose my money. Let me give you an example of a mentor of mine that, for a long time, he refused to put his money in anything apart from fixed deposit. And he just said, you know what, I know myself. I don't want to lose my money. I just want to see my capital intact, right? And when we were doing his net worth calculation about 4 years ago in 2018, we realized that he had earned about 480 million, right, in 10 years as interest on fixed deposit. All because he kept saying, no, this is the only one I understand. Let me just put my money there. I don't want to lose money. So his investment objective was safety of principal. Some people want income, right? Some people will tell you, I want an investment that will give me money on a monthly basis, on a quarterly basis, on a biannual basis, on an annual basis. That's an objective. And then some people will say, I want my capital to grow. Yeah. Can you see? There are three different objectives. Yeah. They may be similar, but they're different. Safety of principal. I don't want to lose my money. If I give you 50,000, I want to be able to come back next year. Even if it has not added any interest, let my principal be safe. Some people will say, I don't care. Just give me an investment that will return money to me on a regular basis. And some people will say, I give you 50,000, I want to have 100,000. So what is your own investment objective? And of course, there are secondary objectives, including liquidity and tax minimization. But I want us to focus on the primary objectives. I'm going somewhere, just, stay with me. As we go into this conversation, here are a few things I need you to know before I go further into objectives and all of that. Your financial journey is unique and it is personal. You can't do things the way people are doing it. Do you understand? You can't do investments because your friend is investing, right? Your financial success is also your responsibility. I see people blaming everybody but themselves. Some people are still even blaming their late parents. Say, if not for my dad, if not for my mom, if not for this and that. Some people blame their spouses. Some people blame the government. Yes, I know that if you live in Nigeria, there's that high tendency to want to blame the government. But hey, at the end of the day, your financial success is your responsibility. There are things within your control. There are things outside of your control. You see those things within your control, like what you make and how you spend what you make, you have to take them seriously. Now, in order to attain financial literacy, financial success, number 3, you must embrace financial literacy. Number 4, to be successful with your finances, you need to leverage technology. Again, I am reiterating this fact. Please give me a minute. Give me a minute, please.
No problem, sir.
You need to leverage technology. Now, we all carry our smartphones around. We are all on social media, right? We are all Googling, so to say. We are all on Twitter. We are all staying abreast of facts. We know what is happening. If I ask you now, what has been trending on social media today? We are all likely to know. But how we don't leverage that same technology for our finances? Do you see? The next point that I need you to know is that you need to start investing early. Early is relative, and that's why I said now. Okay, I don't know the demographics of the people on this call. Maybe you're in your 20s, 30s, 40s, or whatever. Now, early is now. So early is, I need you to type out that phrase, or in it, early is now, right? And then the 7th thing I would like abreast of facts, you need to monitor, you need to track. Right, thank you, Elise. Now let's go on to the investment objective thingy that I was talking about. Whether preservation of capital, whether income, whether appreciation of capital. See, if there's one thing you will take away from this webinar, I want you to screen grab this image on my screen, on your screen as well. There's no two-way, there's no shortcut to getting wealthy more than applying what you see on this screen. And what does it mean? How do you get wealthy? Start early. Spend less than you earn, then invest well. How do you start early? You earn money. Remember, I said it's not, let's not even mention all the monies now. Whatever you're earning is a good enough seed. I remember my son came back from school yesterday and he said, they said to plant onion. He's 7. He said, okay, we will plant onion for you. So we put the onion in a bowl, put some soil. By evening, he said he wanted to go and put that grow. I like your faith. No wonder the Bible says that you need to have the faith of children. My darling, it's even been up to 3 hours that we planted. He said, I'm going out, I want to go and check my onion. That's what my generation wants. You want to invest money today and reap like 20. You invest and then you allow time. You allow time, you give it time. This is the process. So beware of people that will say, no, I can give you something that will give you like, that will make you wealthy in like 2 months or 3 months. Take that advice with caution. You earn, save and spend. Out of what you have saved, you invest. So again, saving is not the same thing as investing. But this image was what revolutionized my mindset about investing. But will take it away from there. Let's go on to the next slide. Remember that I was talking about objectives, investment objectives. I will still go into, what kind of investment should you do? I'm just trying to lay a foundation. I can bet that if I ask you, what kind of investments do you know? Have you seen or have you done? We all will have answers. And maybe I should ask, tell me, what has your investment journey been like? What are some things that you have invested in? Yeah, we like action, but we need to also, make our time to get information. And that's why I'm taking my time to go through these things. We will arrive somewhere soon, but follow me. So far, don't forget that we have talked about investment objectives. What is your investment objective? Do you want preservation or safety of your capital? Do you want income? Or do you want growth of capital? That's the first place to start. And this will influence the kind and the types of investment you should do going forward. Izunwa says she has done stocks, she has done agribusiness. Now, Izunwa, let me ask you a question. Did you have an investment objective before you started to invest? Or did you just invest on people's recommendation? Tell me. What is your investment objective? Linus, let me ask you, what is your investment objective?
Well, thank you very much, Madam Stella, for that question. So my investment objective are categorized for the short, the medium, and the long term. So it depends on which one I tend to prioritize at the moment before I can actually make it or to put my headway towards it. So my investment objective for the long term, and for the short term rather, is to see how I can pay my rent and also pay my tuitions. While my medium term is to see how I can get a new car, the latest car, Then my long-term goal is to see how I can maybe get a property in Banana Island or something like that.
I like your goals. I like your goals. They're audacious. So I would say that your short-term investment objective is income, because you're trying to make money. So across income, safety of capital, growth of capital. So I think I say income because you want money to be able to pay your bills. You want money to be able to buy a house in Banana Island. Izunwa says he wants income. Is there anybody on this call who has safety or growth of capital as an investment objective? Let me know. Let me know in the comments. All right. So again, growth versus income. I have told you that your investment objectives could be 1 out of 3. You want income, you want growth, or you want safety of your capital. Some people want income. Some people just want an investment that can give them money every year or every month. But some people will say, no, I don't want the income. I want let's say I have 100,000 or 1 million in an account. I want that money to have tripled in 2 years. So do you see? Nolly says that, income.
Yeah,
was it income that
income.
pushed you into MBA Forex or growth or preservation?
I believe
If it
that
was
should be growth.
preservation, Nolly, you won't be in MBA Forex. So maybe it was income. That income that comes from time to time. Oluwaseun says she wants income. Remilekun wants growth. Nolly wants income. Debbie has invested in stocks at Forex, and the objective was to grow. So again, I see that you guys are with me, and this will help you going forward. Before I put my money, no matter what everybody's doing, if everybody say, yes, this is the way to go, does it align with my objective? And what is my objective? And sometimes you might have a mix of the two. You might have income and growth as your objective. I want an investment that will give me income on a monthly basis. At the same time, I want my portfolio to grow. Some people say, no, I don't want income, just preserve. So when I need that money, I can always go to it. Kudira says, I want growth. Famous says, I want income. I have a certain expenses have made me value safety. I love it. I thank you for being a part of it. Don't forget to also tell your friends to join. For me, if you ask me, I want income. I like income. And I like safety. At least, if the money is not going, let it not be reducing. You see, that's my sentiment. All right, let's move on. All right, so income investors, they want wealth preservation, they want lower risks, and they hold more fixed income assets. I'm going to talk about those things. Some people are balanced. They want a mixture of two things, income and growth. So they seek wealth preservation, they accept moderate risk, and then they want a balance of growth and income investments. But you see the people that want growth, they want appreciation. So they want their money to move from 1 million to 10 million in like 2 years. So they will do anything possible. They accept higher risk and they hold more equities. But I mean, this year has showed us that let him that thinketh is standeth take it, lest it falls. So what kind of investment should we be doing in a very, very, very volatile year such as this? For those who are income investors, they will just say, let me keep my money and put it in something that can give me like monthly returns. Monthly, But the people who are aggressive, do you know there are people who are still actively investing in the stock market? Actively investing in Forex. Somebody came into my DM recently and said, Madam Shola, I want to show you a way out. I want to show you a way. All of these things you are saying about, I want to show you some form of investment that will give you 5 million in 3 months. I didn't even respond. But there are people like that who are seeking growth and appreciation. I am not wired to take on such risks. Okay? Way out. God, thank you, Nolly. All right, investments with meaning. So the reason I am taking my time on this particular section of investment objectives because I want you to bear this in mind going forward. Always remember your investment objectives. Now, Lionel said he wants to be able to pay his bills. That is income and a bit of safety. Because if Linus takes his rent money to go and do MBA Forex, it will end in premium tears if the Forex does not return the money. Do you see? So each time you have money to invest, always remind yourself, make it like an affirmation. My investment objectives are to, number one, have income, have safety. It will help you. Now I'm going to move faster from here. Remy says she's not aggressive in that manner. I love it. I love it. So let me move forward really quickly. Before we go on, let's even pause a bit and talk about the things that have been happening in the economy and around the world. And I will share some interesting statistics with you. Samuel says, edge against a falling naira. That naira, the rate at which it is falling, even Victoria Falls is not falling as much. Right? Bloody. I love it. I love this audience. Thank you for making it real. Now, sometimes when you think that Nigeria has, you know, the worst economy in the world, when you think that, hey, Nigeria, yes, people are jackpot because this country has no clue. You need to look at things happening around the world. If you look at what you have on the screen, look at the countries with the highest inflation rate in 2022. How many of you know the current rate of inflation in Nigeria? Tell me in the comments. Just drop it first. Current inflation rate in Nigeria, who knows? Tell me, who knows? I see a couple of my Smart Stewards community members here. Well done. Well done. Go into our community groups, pull people out. So Adeshala says 20%, 21%, well, within the range of 20 to, I can't remember the exact figure for September. But look at what I have on my screen. Did you ever know that Turkey has 73.5% inflation rate? Did you know that Lebanon has 206%? A couple friends of mine, friends of mine, they went to Lebanon 2 months ago. Inflation rate is 206%. Sudan, 220. Argentina, 58. Syria, 139. Iran, 39. Ethiopia, 36. Zimbabwe, 131. And Venezuela, 222%. So before you complain about Nigeria, hey, just look at this and still thank God. Because if inflation rate was 300 in Nigeria, imagine what we are going through and what is happening. I mean, look at the Western world. Russia is 17%. Nigeria, as at the time this particular one was, this chart was done, was 16%. Poland, Netherlands, everywhere. The whole economy, global economy, is undergoing inflation. So don't think that whatever is happening is peculiar to Nigeria. I'm saying this so that, you know, your resolve to get better with your finances is sort of motivated. You go to America today, you relocate to London tomorrow or to the UK. These things are happening. So when I found that your personal financial success is your responsibility, it is truly your responsibility. Even though some systems will make it easier, but hey, if you're not able to save in Nigeria, if you jackpot, you might not likely to save because you haven't, you know, built those. Are we still together? We have talked about objectives, your investment objectives. We're establishing the fact that inflation is global. And I'm saying, hey, listen to me. Irrespective of what is happening in the economies of the world, your responsibility is to take your finances seriously and to decide on what you want to do and to get knowledge and to take actionable steps that will move you in the direction of your goals. And that's why we are here. And thank you to PAC for doing this. We are sharing knowledge, learning from one another, and knowing how better we can channel our resources so that when we, yes, hopefully soon, get out of this state of all of this global thing, you're in a better place. If you do not take the right investment decisions now, when things happen, you'd have been a spectator, a commenter on social media, whilst you should have been, you know, taking the necessary steps. Now let's move on. Another thing I want to mention before I talk, you know, just give a broad advice on the kind of investments you should be doing. many of us do not understand what I call the real rate of returns versus the nominal rate of returns of investments. Now, we have established, let's even say the inflation rate in Nigeria is 20%. Right. Now, literally, as if I'm talking to kindergarten kids, your nominal rate of return is what an investment offers you. So let's say they say, okay, per year, you're going to get 20% or 15%. That's the nominal rate of return. But your real rate of return is that nominal rate of return minus inflation. Should I explain that? So let's say that PACAM is an investment opportunity, a fixed income opportunity, a mutual fund, and they're offering us, let's say 14% per annum, which is good. Yeah, 14%. Let me go and bring all my money and start small. And inflation rate is what? 20%. Your real rate of return is what? 20%, 14% minus 20%, which is minus 6. But that's still better. Yes, you get that return, but technically, what you are getting, after factoring inflation rate in, is what? Minus 4%. It just shows you that inflation is such a, I don't know the word to use. Inflation is an enemy of wealth. Now, if you do not take any action regarding your money, inflation is killing your money already, killing your wealth already. But when you take action, at least you're able to hedge, the impact of inflation. Are you with me? Are you learning something new? So again, these are subtle and little things you should bear in mind each time you want to invest. What are my investment objectives? What is the inflation rate? What is my nominal rate? I am better off putting my money in this thing than to just leave it in my savings account. Some of you have 100,000, 200,000, you keep it in your savings account, subjecting it to a lot of risks, risk of theft, risk of internet fraud, and the risk of being eroded by inflation. So are you not better off putting it in low risk and safe investments than just leaving it in your savings account? Right. These are key things that you must bear in mind, things that we do not talk about all the time, but they are things that are necessary for your investment journey and for your personal financial journey. Right. Thank you, Olatunde. Keeping money in savings accounts is a waste of money, but that's what we do. When I read threads on Twitter that says, scammers, they kidnapped me, or they took my, some people took my, they didn't even kidnap the person because it is not me, or they will not kidnap me. I kept some money somewhere, and then in my account, I just woke up to debit alert. I read one recently, and I'm like, wow, really? Really? You kept 4 million savings in your regular account. Are you not tempted to spend it? And then are you not exposing that money to the risk of being stolen by scammers? And these days they have found out more sophisticated ways of scamming people. If not, why would Hush Puppy have scammed people so much? Hush Puppy is in prison, but there are still tons and tons of scammers. See, these are financial tips that will help you. Again, don't say your money is small. How should you be investing in a time like this? We are talking about financial finesse. What are some of the things to consider? I would say this is no form of financial advice, right? PACAM or PAC is a registered asset management company. Yes, they can offer direct advice. They will still come up. We'll have a session right after my presentation where we'll talk about, some of the things that they know about the industry. But me, as a finance coach, if I were to advise anybody this year, in the remaining months of this year and as we go into 2023, what should you put your money in? A lot of us have lost money in very risky investments because we're looking for growth of capital. We're in litigation cases. We're trying to recover funds, But hey, how do we move forward? We can't continue to, dwell on things that have happened in the past. How do we avoid making mistakes that will lead to premium tears in the future? I will suggest that if you have money these days and as you budget your savings and investments, consider a tidy sum going into what I call cash and cash equivalents and fixed income securities. Now, this is highly personal, but I think it works, right? And how do you invest? You don't have to wait again till you have that big money. Start small. If you cannot remove 5,000 naira on a monthly basis from 50,000 to invest, to save and invest, you're not likely to be able to remove 50,000 naira from 500,000 naira because you haven't built the saving and investing muscles. So this is a practical way of going about it. What do you earn on a monthly basis? Take out your bills, take out your other obligations, take care of yourself, but please allocate at least 10 to 20% of your income for investment and savings. And these days I tell people there's a thin line between savings and investment because there are investment products that have, the characteristics of savings. They give you higher returns, but you know what? They're open-ended. Mutual funds, for example, I see PACAM mutual funds. If it is the kind of mutual funds that I am aware of, what does that mean? It's open-ended. If it's 5,000 today, you have 5,000 tomorrow. Each time you have money, you have 500,000 today, you have additional 500,000 you add to it. You have 1 million, you can add to it at any, it's open-ended. And it's being managed on your behalf. You don't have to worry, okay, so where is this money going? The mutual fund managers will know where to put it. Now, let me go back to what I was saying. 40 to 50% of your money can go into cash and cash equivalents. Remember, some of us, we want safety. Some of us want growth. Some of us want income. Now, these things will return income to you. It might not be much, but it returns income. So 40 to 50% in cash and cash equivalents, in bonds, in fixed income. For example, mutual funds, right? Either in naira, in dollars. I mean, I was going through the chart earlier and someone was saying that, inflation is making the naira fall every day. At the beginning of last year, if I'm right, I still exchanged dollars, I can't remember, for 360. I have somebody who does it for me. And I was recently telling him, I said, we have moved from 360 to exchanging money at 850. How sad. That's almost like 300%. How sad. So again, as you are investing in naira, consider a better chunk of your investment in dollars as well. I'm going to rush through this so that we can go into the panel session. Right. Okay. And then you can consider the balance, the remaining, maybe 6% into cash and cash equivalents. And then the remaining into more volatile, more risky or riskier assets that can also provide the kind of growth that you want. I mean, it might be a good time. Somebody says that all stocks are down right now. When I say stocks, I'm talking about foreign stocks because I really don't know what is happening with Nigerian stocks. Now, a lot of things have happened, but these days you can buy fractional shares all around the world. Some of those stocks that you really, really like, Amazon, Facebook, those big names, they're all struggling anyway. So their stocks, their shares are on sale, literally. You might want to also buy all that for the future. Every month, $10, $5, $20 into some of those things and build your portfolio for the future. But most importantly, you need to build your cash nest. You need to be able to provide some investment liquid enough for you to access when you're ready or when you need the money. Somebody that wants to pay rent, that wants to do this and that, you're putting something aside. So that's it. I mean, ideally, that's what investment should be. You're saving it for the future. The Japanese proverb says, if you save money, money will save it. That's the ideal thing. Unfortunately, investments are not as rosy or they're not as simple. There are some types of investments that you can do and you put your mind to rest. I need my mutual fund. Money market mutual fund, I know that there will never be a time where the money would have gone down, but I know that my capital at least is preserved and there's some extra on it. So this is just a very conservative way of apportioning your funds. Now, the chat box has been very empty. Are you soaking it in? Are you sort of, reminiscing or thinking about some of the investments that you do or that you have done in time? So tell me. Just one more slide, and I think that's it. This is just breaking it further down. If I were to invest, and these are the things that I am currently doing, 10% in cash and cash equivalents, money market mutual funds, right? And then 45% with asset management companies, fixed income. I'm doing dollar mutual funds. I'm doing a bit of euro bonds. They're quite safe. When I need my money, I can go in, I can collect it, I can say I'm not doing again. But again, you can't go a portfolio just with fixed income securities. And that's why we have some of these other investments, but I'm not going to go into stocks and individual company stocks here. How many people are from Smart Stewards here? Let me see you in the comments. Now, Ige says, what's the difference between savings and investment? Simple. Saving money means you are putting aside money. Investing means you are putting the money to work. Do you see? Put aside. You must first of all learn to put aside, aggregate it, and then put to work. But these days, you know what? As you are putting aside, you can be putting to work in a mutual fund that has characteristics of a savings account, because you can always add to it from time to time. In those days when you do fixed deposit, once you lock your fixed deposit, you can't add to it until the maturity expires. But these days, mutual fund, you can build, you can build, you can build, you can build on it. Linus, I think I want to stop sharing here. Again, this is another slide that can help you. Fixed income, mutual funds, have an allocation. And let me try and summarize. These are just, let me end it here, and then we'll take on other things in Q&A. But I'm just trying to say that, hey, guys, have an investment objective, first of all. Take responsibility for your finances, for your financial growth. There are things outside of your control, but there are a lot of things within your control as well. Get information, add knowledge to knowledge. Do you understand? Follow those who know. More importantly, in a season like this, take on investments that are low risk. Pursue safety. Again, I'm not saying pursue safety with all your money. You must also, depending on your age, you must also aim at high risk investments. But you need that safety for a season like this. And that's what I believe PAC offers. Mutual funds that, you know what, if it is 5,000 Naira today, if it's money market mutual fund offering over 14%, I will not come next year and it is 4,999 like the stock market. Stock market, you can put 5,000 today, and when you go next month, go and check it next month, it is 2,000. Do you see? With fixed income, with mutual funds, money market mutual funds, they're safe, they're cheerful. In the sense that you go and then they increase slowly. But hey, slow and steady wins the race. Somebody says, recommend any mutual fund. That's why we are here. PAC will provide a couple of options for us, not just in Naira, but also in dollars. I've tried to make this conversation very simple enough. I didn't want to inundate you with very, very big grammar. But again, do not forget the things that I have shared. Take responsibility, build slowly, more fixed income and cash equivalents. Always, always, always remember your investment objectives. Linus, over to you.
Oh, thank you so very much, Madam Shola. This has been an insightful moment with you. There are some things that I don't even know myself, but listening to you give this presentation wow, it opened my mind, my subconsciousness towards paying attention to some things that ordinarily I don't really put into consideration. Well, before we go on, I would like to also acknowledge the presence of Mr. Bamidele Ige. Yeah. Bamidele Ige holds an MBA in finance. He's also a member of the Associate Institute of Chartered Accountants of Nigeria. So he's currently the MD CEO of PAC Asset Management. So please, I'd like to welcome him to the group. So, Madam Shola, really, we can't say thank you enough for this insightful moment. And you've actually took us through this few minutes spending with you. So, however, you know, as investors, and we really are saddled with so many questions that we might not tend to have the answers maybe in a day-to-day conversation with our fellow colleagues. So, you know, people might not necessarily be that kind of investment savvy to understand. Please, in respect to that, I would like to ask, what common mistake do you think people make regarding investment? So I don't know how you can help with that.
Is that question directed at me?
Yes, please. Yes,
okay,
please.
brilliant. I love it. So what common mistakes? I tell people, see, there are 4 things to consider before you start to invest or whilst investing. I mean, and those from stewards will know this. Anybody who is from Smart Stewards and who is asking about mutual funds, we will provide more details about PSC. And, you know, we're on a 70-day challenge. I'm sorry to sort of, you know, quickly digress. We are on a 70-day challenge. And, you know, earlier this week, I think it was on Monday, we talked about mutual funds. So this is one, I believe the PSC people will share with us. This is one to have. But we will take it back to the community and have those conversations. Back to your question, Linus. I share what I call the SGAR factors, and they will help you. I mean, they address the mistakes that people make, right? And the first one says, S stands for financial situation. Consider your financial situation. Again, I've said this time and again. You cannot invest the way any other person is investing because your circumstances are different. Now, Mr. Linus, I don't know if you are married. I don't know if Mr. Ige is married. Just for an example, let's assume Linus is not married, but Mr. Ige is married. And Mr. Ige has 4 children. Now, Mr. Ige cannot be bugaing like Linus is bugaing with his finances, because their responsibilities are different. Now, Linus can afford to do TGIF every Friday because once it's done, he's going home by himself, right? But Mr. Ige would remember that, hey, school fees, so, hey, house rent, and all of those things. Do you see? Number 1, do not invest based on people's recommendation. Don't invest based on what people are doing. Your financial situation should determine what your money is going into. For example, when crypto was all over the news, hey, crypto. Somebody who is earning 2 million per month versus somebody who is earning 200,000, let's even say 100,000. If somebody who is earning 2 million takes 400,000 from their money to do crypto, it's still like a drop in 2 million. But the person who is earning 100,000 now takes 60 or 70,000 to go and do crypto. Can you see where the problem is? So number 1 mistake is people invest based on sentiments. Stop it. Invest based on your peculiar financial situation. Per time. Number 2, your goals. I like what you said earlier on. When I teach financial goals, I tell people our goals are different. And we must be able to break our goals into short-term, mid-term, long-term goals. Your example is perfect, Linus. Short-term goals are things you want to do in 1 year. Mid-term goals are things you want to do 2 to 5 years. I mean, give or take. And long-term goals are things you want to do beyond that. You cannot take your rent money, which is a short-term goal, and go and put it in a very volatile investment. Do you see? So you must consider your goals before you invest. Again, you can't work with some other person's goals. I say, they came to our office, they told us about crypto. That crypto, you not take your rent money. Number 3 thing, mistake that people make, and it has to do with age. I received an email earlier today, and somebody was saying, oh, I am on your challenge. We're running a 70-day challenge. And I'm in my 70s. Again, when we give advice, we have to be careful. Somebody who is in our 70s cannot invest the way somebody who is in their 20s will invest. But people just say, no, they said we should do it, and you go for it. Always consider your age. If you are nearing retirement, you must consider fixed income assets more than other volatile assets like stocks and other things. Do you see? And then the final thing, remember I said SGAR, your financial situation, your goals, your age, and your risk temperament. When we started earlier on, some people were saying, I'm low risk. Oh, I know people who are, they don't care. They have lost money in crypto. Tell them about another very volatile investment. They will put their money. Because they have developed thick skin. But some of you, you know that if you lose 5,000 like this, you will cry for 1 year. You can't follow people like that. So know your risk temperament. I hope it answers the questions. People make investment decisions outside of these 4 things, and they make mistakes all the time. I used to be a low-risk investor. Over the years, my risk temperament has increased. I can take on more risks because I have gained more knowledge. I lose money sometimes, like, well, it will come back. And I have the right mindset about money. So remember these 4 things all the time. And under your goals are your objectives. You always, hey, do I want income? Do I want growth? Do I want preservation? Rinse and repeat all the time. I hope that helps, Linus.
Thank you so very much. But I don't know if Mr. Dele has anything to say. In regards to the question, what common mistake do you think people got in investment?
Okay, thank you, Linus, and good day, everyone. Thank you for being at this webinar, and I believe that you've had a great time and you've received a lot of insight from Shola Adeshaki. Trying to tackle the question from Linus, I would say for an investor, if what are the common mistakes? First of all, you don't invest in what you don't understand. If you're making any investment at all, the first thing you should do is to understand the nature of the investment. For instance, people who venture into Forex trading, I mean, if they don't understand the concepts behind it, they don't understand that, look, Forex happens at 4 different locations across the world. And, you know, there are different times these markets are open. For instance, there's a market in Tokyo, Japan, another market in Sydney, Australia, there's a market in London, England, and of course, there's the New York market. And, you know, these different markets trade open at different times, and the volumes vary depending on the market. I mean, the most liquid market, of course, will be the New York market. So if you don't understand some of these things, you might get into an investment that loses you money at the end of the day, not because the investment itself does not work, but because you don't have the proper understanding to be able to operate in that space. Now, what we do in PAC Asset Management, for instance, is we try to work on an investment advisory basis to help you understand the product you're investing in. So for instance, if someone were to approach us to say that, look, I need to do an investment, we sit you down and run you through what is called an investment policy statement. You know, try to understand what are your risks, appetites, your liquidity requirements, your tax position as well. We put all of those things together, and we try and design a portfolio that is suited to you. Like Shola had said earlier, everybody's financial situation differs. So another way that I'll try to answer this question is to look at what I call the investor life cycle. I mean, she had said that, look, you need to consider your age when investing. So, for instance, someone who's fresh out of school, got a great job, good salaries, can say, look, I want to invest a greater percentage of my income in the stock market. And we all know that the stock market can be quite volatile. But this person, one thing that is good going for this person is they have a whole lifetime ahead of them. So even if they lose money now, they have time to recover. Unlike a 70-year-old who would want to invest in the stock market, what could happen to that 70-year-old is if he loses money, he can just lose his life with it, unfortunately, because he suddenly realizes that, look, I don't have time on my side, the energy to really work and make money again, that can sustain my already established standard of living. So, I mean, I encourage people that, look, one of the most important things, aside the points that Shola had already made, is to ensure that you have an understanding, look at your own situation, your personal financial situation, and determine, look, does this product suit me? Does this suit my risk appetite? And then you can go on and invest. And of course, let me just add that, look, if you have problems determining what you should be doing, you should talk to the experts. Talk to the experts who would give you the right advice or the right guidance on where and how to invest. I'll stop there. Thank you.
Really inside out. Okay, so also there's no in the investment world. We are saddled with so many questions, though Madam Shola actually tackled most of these questions pertaining investments, your objective, and what you intend to gain or what you intend to achieve. However, the current trend of the economy has actually not been that fruitful. Let me use that word. Permit me to use that. Now, some of these questions come to mind, like with the
to $1. Today, we're talking 800, 900 to $1. It means that the rate of decline is, I mean, we're talking about 150% decline in the value of the Naira. What this just means is that, look, if you had money then, to buy a loaf of bread, you have to borrow additional money now to buy the same loaf of bread, unfortunately. You understand? So, of course, as rational investors, we encourage people that, look, if you have money to invest, diversify your portfolio by all means. This will help you preserve what you have worked for. It will help you preserve your wealth. But of course, in diversifying, you should also have a portfolio approach because you still spend in Naira anyway. You just want to, keep aside protect the extra you have. So you can have a portfolio approach to say, look, this percentage of my monies or of my earnings go into, a foreign currency denominated type of investment. And then this percentage remains in Naira to meet my operational needs, if you like, for lack of a simpler word. Now, the question is, when I diversify my portfolio into USD, where can I invest or how can I invest? There are several options. Some of the ones that we have a dollar-denominated mutual fund known as which means you're earning in a different currency. And if the value of that currency is better than the value of your local currency, it puts you in a position. So, I mean, I'll stop there. We encourage people to preserve your value, preserve your wealth, have an allocation to foreign currency denominated investments. When you're investing in foreign denominated investments, some of the things to look at is, for instance, if you're investing in the dollars, what is the inflation rate in dollar? And what is the rate of return? I mean, I listened in and I know that Shola did mention your real return. I mean, if the dollar inflation rate, for instance, is a 4%, then your benchmark for investing in dollar-denominated investments should be a minimum of 4% to maintain your value. Because the moment the rate of return you're earning on your dollar-denominated investment is lower than the inflation rate in dollar, you're actually losing money. So I'll stop there and I'll hand it back to Finesse.
Thank you so very much, sir. That was insightful. Okay, so we'll go on and would like to acknowledge the presence of an investment analyst in the person of Semi Tucker Julius. So he would like him to come and give us some insight on the type of products that we have at.
Good afternoon. Thank you. Thank you very much, colleague. Nice to meet everyone. Inshallah, nice to meet you. I've learned so much from this conversation. So I'll just quickly run us through the products that are available to investors, retail, institutional, and high net worth. So start with our money market fund, which is the easiest of them for clients who are they want to preserve their capital and want to ensure competitive interest rates compared to your usual bank deposits. So our money market fund is an open-ended fund, like our panelists have mentioned. It's an open-ended fund that allows you to redeem or subscribe additional funds apart from the initial funds. We have competitive interest rates compared to your typical bank deposits that you have. So this money market fund, it enables you to save once you have money, and you don't need a lot to start. You don't need so much to start. Like Shola had said, the 5,000 every month will help you save enough. If you are planning to save towards buying a car next year, you're planning on saving towards buying a house in Banana Island, or whatever it is that you have scheduled, you can decide to time, right? So for investors that want nothing to happen to their capital, initial capital, you are loss averse. There's something we call the loss aversion. So you don't want to lose any capital. You want to preserve your initial capital. You don't want anything to happen to your funds, unless you are going to start crying for the next 1 year, like Shola said. That is the fund you want to explore. Now, the assets under this particular mutual fund are the typical treasury bills, the commercial time deposits. We do the decision making of where to put these funds, and we do that. We have some of our other funds that are Naira denominated for clients who have a higher risk. You know, you want to take risk. You know, you have the stomach for more risk, and you want to do more. But this one's the other types of fixed income fund, PACAM fixed income fund. We have the PACAM balance fund. We have the PACAM equity fund. The fixed income fund is a more fixed type of mutual fund that allows investment into bonds and treasury bills as well. It's more volatile because you mark to markets, but that's a particular fund that helps you to get returns through capital appreciation and dividend income. Dividend is paid once a year for that fund. I'd also mention again, for the money market fund, dividend is paid on a quarterly basis. So after every 3 months, you're expected to receive your dividends, right? So I move on to the balance fund. The reason why it is called balance fund, I should explain, because a certain percentage is invested in the equity, some in the fixed income market. It helps you to balance off, because typically in the investment world, the fixed income and the equities, they are inversely proportional, meaning that when the fixed income space is doing so well, you'll likely see that the equities market are more volatile, coming down. But when the equities market are going up, you see the fixed income space dwindling below. And that helps you to also have a balanced portfolio. You don't want to do you want to go to trouble of deciding which equity or which stock should I buy at a particular point in time. What should I do with my money I have to buy for fixed income instruments at a particular time? If you invest in that product, it allows you to also make a decision on your behalf while you buy units into that fund. Same thing, we pay dividends once every year. as well. And then we move on to our PACAM equity fund. That's, as the name implies, PACAM equity fund is purely invested in from 70% to 100% of the assets in quality blue chip stocks listed on the Nigerian Stock Exchange. And we pay dividends once in a year. Now this fund is for people that you have high risk. You don't want to go to the trouble of deciding what particular stock or which company stock should I buy at this particular point in time. And you just want to invest. You just want to invest through us. We want to help you. We're going to help you to make the decisions on your behalf. You can invest in that stock, in that particular fund as well. And then to our PACAM Eurobond fund, that is our dollar-denominated Eurobond fund. Like my MD has said, this helps you to hedge against devaluation and inflation, rising inflation that we've seen for the past 1 year or 3 years. And you've seen that the value of the naira has been dwindling against that. People that invested in that fund, usually we pay dividends 1 year, or sometimes we've seen pay out an interim and final. And so we are sure to get dividend every year from that, and also gain from capital appreciation. We also have other typical investment products like the high yield note and the fixed income notes. And if you want to buy Eurobond instruments, you want to own a Eurobond instrument, be it a sovereign bond or a corporate bond, you can invest through us. And these are the kind of products we offer for you. Our high yield note product, it helps you to fix your money for a certain number of period and get a particular rate. So that is basically what we offer at PAC Asset Management. If you have further questions, please contact the numbers now displayed on the chat box and we will get back to you. Thank you very much. Amos.
Thank you so very much, Julius. That was very, very apt and insightful. Thank you so much. This will be a question and answer session, and initially I saw Vivian Asana raising up her hand. I guess if she's still around, maybe she can ask her question. Is Madam Vivian Asana still here? Hello? Okay. So a link has been dropped in our chat box to evaluators' opinion polls on our risk appetite and which of the mutual funds you intend to invest in. So kindly go to the chat box and visit the link, log on the link, and partake in this opinion poll. And whilst we continue with the events accordingly. So, Madam Shola, thank you so very much. We really appreciate your time and insightful presentation on investments. And we know if we stay here and ask all the questions we intend to ask, we'll never run out of questions. But one last question, please, before we go. So, though you've actually made your points clear, but when do you think is the right time to invest? I believe you've shared that before, but would like to reiterate it so that for those who are here to know that, okay, maybe they might have that question at heart, but when is the right time to invest? As an investment expert, that is your field, and maybe you can give us a general overview of the investment space as well. Please, Madam Shola.
All right, thank you. When is the right time, or when is the best time? The best time is to start early, and early is now. I think I mentioned that already. I don't want to go into all of those, graphs and comparisons of somebody who started at age 18 and then stopped investing at 30 and then, had more money than somebody who started investing much later. But time is your friend, to be honest, right? Time is your friend. Time is something that will give you leverage, in investing. The earlier, the better. And again, don't wait till, I've said this, a number of times today already. Don't wait till when you have that big money. I think, attaining success with your personal finance on your financial journey, requires consistency, requires you understanding the importance of time, right? Understanding the role time plays will help you pace yourself. Number one, it will prevent you from jumping into things that will not be profitable at the end of the day. Do you see? So when is the best time? Now. Last year, I ran a couple of series, for those in their 20s, 30s, 40s, 50s. And, we talked about so many things, when it got to the session for the 50s, a lot of regrets, a lot of things. And I'm like, start building the muscles. Build the muscles. Yes, you may not have started early, but start now and work out those muscles. Follow the principles. Life answers to principles. As long as you continue to put that money aside, do the right things, seek knowledge, get professional advice where necessary, you will achieve results. I say this about myself a lot of times. I mean, many years ago when I started my journey, I thought being a chartered accountant would help me sort of build wealth and give me like an early head start. But I didn't have financial literacy. So I was making about $500,000 17, 18 years ago, and I was just making a mess of the whole thing. I made money, lost money, wasted money. Each time there was like a sale, BA sale, Virgin sale, Delta sale, Atlanta 90K, just jump on it. And I paid for it because there were consequences I didn't like. But when I decided that I was going to get more serious with my finances, I started. And these days, I'm like, I have money in some investments that I do not even remember again. There was a mindset shift, and I built the muscles. These days, I can make money and then save like 80% of it. And I'm not feeling anything. I'm not under any pressure. So it gets easier. It gets more interesting when you combine so many things. Starting now, becoming resolute that, see, my financial future is in my hands. No government is going to help me. And then you take actionable steps, you build knowledge upon knowledge, you work with the right people, you will get there. I mean, soon and faster than you expect. So again, the destination is relative. The most important destination is coming to a place of peace in your mind that, hey, I'm doing the right things with my finances. And then the universe will connect with you, open you up to so many opportunities. I got an alert today from an investment I had done. Like, wow, this is so refreshing. This is so lovely. Like, hey, yeah, this thing is working. And here we are teaching those things. So, now is a good time. Right.
Thank you so much, man. Thank you so much.
Sorry, I see a couple of questions. Sorry, I see a couple of questions directed to you, in the comment.
So I can see one like, please, can those from Ghana, this is from Ernestina, please permit me so that, sorry, I don't murder your name. Ernestina, she's asking, can those from Ghana also invest? Well, I'll leave this question to Temitope Julius. Please kindly help us with this question, please.
Yes, so from whatever country you are, as long as you have your deposits in Naira, can invest for you. And if you want to invest in our dollar denominated instruments, of course, if you have dollars to invest, we'll help you invest those funds. Thank you.
All right, thank you so very much for that.
Let me also quickly chip in that on our current challenge, we've got people from about 38 countries as at the last time I checked. And I wouldn't be surprised if we have people from maybe Tanzania, Kenya here, because the challenge is ongoing. So, I mean, if you provide us with information on how those who are outside of the country can partake of your dollar funds, would let them know. Of course, I won't encourage anyone to change their money to Naira, anybody out of the country to change their money to Naira. But for dollar funds, let us know. And the minimum, somebody is saying, what is the minimum for the dollar funds? So we can communicate this to those on the challenge and they can leverage the opportunity. JC.
All right, thank you so very much. Well, just like Temitope Julius mentioned, you can actually have your investment from wherever part of the country you find yourself. Everything is digital right now. On the tip of your fingers, you can just control everything to your own convenience. So you can run your investment from whatever part of the country you are. All you just need to do is just send us an email I believe the email has been shared with us on the chat box. Send us an email or contact any of the phone lines that are made available on the chat box, and you will get first-hand relationship management and communication and discussion on how you can actually progress in your investment journey you intend to begin with. And we would love to have this to embark on that investment journey with you. So I guess we're almost rounding up, and I would like to get more questions from our audience. Would like to get more questions, would like to engage you, would like to know what are your reservations, what are the challenges you tend to face whenever you try to make a decision on investing. Please, would like to get more questions. We still have about, let's say, 5 more minutes. And let's see how we can make the best of it. And that. Okay, so we have a question here from Omolola, right? Okay, so she's asking, what is the minimum amount you can start with? Well, minimum amount of investment, it depends on which of the investment options or you're trying to explore. You know, we have both the Naira denominated investment and we also have the dollar denominated investment. And we also have different categories too. We have the mutual funds and we also have bonds and also other fixed placements. So, and each of these investment options, they have their minimum starting amount. Like for the mutual funds or money markets, you can start up with as low as 5,000 naira. Just as Madam Shola said, you don't necessarily need to have a money market account. And believe me, the money market account has come to stay. And given it maybe a little projection within the next 2-3 years, the money market, if not already, would sweep away savings accounts. And this is because basically all what you need to do, the only difference between the money market account and the savings account is that, okay, this is an investment account. You tend to get returns on your investment on a daily basis, depending on the interest rate it is running at. And the savings account just only gives you access to your fund at any point in time. And while the money market tries to gives you maybe a minimum of 24 hours to access funds. So it will also help you to be prudent in your spending and give you value for your fund. And with as low as 5,000 naira, you can begin that journey with us. At PAC, we'll give you the best of service. We'll give you a first-hand information on what the current market trend is. And our rates are very, very competitive. We have excellent relationship managers who are there to always attend to your needs at any point in time. So you can just give us a call and we'll begin. We would love to begin this investment journey with you. So we're still here, we're still looking for more questions. I think I have Olatunde's hand up. Okay, so Olatunde, please, is that a question? Do you intend to ask a question or you're indicating your hands up?
I think that hand is pointing to contact details that are already in the chat.
Oh, okay. So in order not to waste much of our time, I would like to leave the floor for the MD to give us his closing remark and votes of thanks to all participants of this event. Mr. Daly, the floor is yours, sir.
All right, thank you very much, Linus, for very good anchoring. I also want to thank Shola for honoring our invitation to be the chief discussant at this event. We appreciate you. We appreciate your knowledge that you've been able to share to the audience. Let me just say that this program is become an annual program, which is the contribution of PAC Asset Management to financial literacy in the market. This is the second edition, and of course, we've talked about investing wisely to hedge against economic uncertainties. Of course, you would have learned a few tips and tricks to use in your investing decisions. But let me just add that PAC Asset Management is here to assist you, to provide whatever kind of support you need in investing. Our product range is wide. We have products available to retail investors vis-a-vis the mutual funds. And all these mutual funds are registered by the Securities and Exchange Commission. From inception to date, some of these mutual funds have returned nothing less than 50%. Some have even done more than 100% of the amount invested since they started. Aside from mutual funds, we have other products, private fund investments, fixed income notes, high yield notes that you can talk to us about. And we also do this in local and foreign currency. So we hope to get more of your inquiries. You can go to our website at www.pacassetmanagement.com, or you can send us an email at info@pacassetmanagement.com. Our telephone lines are, you can call us on 01271 6899. I'll take that number again, 01271 6899. So all these channels are available for you to reach us. On our website, you have a chat box there. You can also contact us through the chat box, and someone will be on hand to respond to you. We hope that we've been able to contribute a widow's mite to your financial knowledge, and we hope that you will patronize us, and we wish you the best in your investing decisions. And we pray that the economic uncertainties will be over, and yes, we will all begin to enjoy the dividends of a good country. Thank you very much for your presence. Thank you, Shola, for anchoring the event for us, and thank you, Linus, for moderating. You're welcome.
Thank you very much, sir. Thank you, everyone. Thank you. So do have a lovely day ahead. Looking forward to begin this journey with you all. Thank you.
PAC Asset Management Limited is a member of Pan-African Capital Holdings Group, licensed by Securities and Exchange Commission to offer funds and portfolio management services in Nigeria. We are committed to providing a safe and innovative investment portfolio to meet our clients' investment needs.
PAC Asset Management is here to serve everybody, whether the retailer in the market or whether the high net worth individual or institutional clients. We have products that serve everyone.
So be wise and invest in our money market fund, fixed income fund, Eurobond fund, equity fund, balanced fund, or our customized investment packages. Our team of dedicated staff and management are always poised to serve you. Just call or visit us. PAC Asset Management, your asset manager of choice.